Hey, what's going on, everybody? Back again with another video. So we're going to take a look at Bitcoin. Currently, Bitcoin is at $23,155, give or take. And recent markets, everybody been talking about, recession is coming. We have further downside to go. And, it's a few people that's saying that we have actually bottomed, and put the bottom inside the market. I want to just look at some indicators or patterns and all that, just to see exactly where we are in the market, if we have indeed bottomed, if we are starting a recession, or if we have some movement to the upside to go. Over this past weekend, I was looking at certain things that was catching my eye in the market, and I just wanted to share those with you. So instead of starting current markets over here where we're at 23,000, we're actually going to start all the way back to 2010, July 2010, 2011 market. We're actually going to start in that area to figure out where that bottom was after we ran up, and why we hit this bottom right here, why we pretty much hit this bottom right here, why we hit this bottom right here, and we're going to see if this right here is the bottom of this market cycle. So the first thing that we're supposed to do is pull out our Fibonacci retracement tool, and this is exactly what I did. So I'll just walk through what I did. I was just playing with the charts, and I looked at the high of the market after we started to run up, which is around $31, $32, give or take. So what I did was I used the Fibonacci tool, retracement tool, from the top, and I pulled it all the way to the bottom, right? Now I feel as though this wick right here, this green wick, is probably an outlier. If you want to include it, you can include it, but I'm just going to stop right here. And we look at the 0.618 Fibonacci from there. So as we see, prices went from basically a penny and then ran all the way up to $30, $31 at right here. That's right here. And then we quote unquote crashed all the way down to as low as $2. Now the 0.618 Fibonacci right here was saying $2.27. That was technically the buy zone, and that was also the bottom in the market. As you see, we started to run up after that. So what I'm going to do is mark a rectangle in this area just to signify that that was the 0.618 range and also the bottom of the market. So the very next thing that I did was just playing with the markets. Did the same exact thing. Fibonacci retracement. I believe I did this one right here. Went from top to bottom, and I think we can pull it. Yeah, we can pull it all the way down here. So this one came a little close. As you see, we went up, going up, going up. We came down, and then this wick right here, we came close to the 0.618 range, as you see. So that right there was a little bit harder to look at or decipher, but at the same time, we do have us coming into the range of the 0.618 Fibonacci. So I'll just mark that again, because that wasn't even the full high of the market, but as you see, we still came close to it. So let's mark that range right there. And now, just get a clear look at that. Since everybody sees that, I'm going to delete this because things could get a little, crazy looking. So we have our two spots. so far. So now what I'm going to do is do the same exact thing. Use the Fibonacci retracement tool. Pull from the top. And this time the top is $1,173. And pull that all the way down to the bottom. So now look at the 0.618. And this 0.618 is for this cycle over here. I'm sorry, for this cycle over here still. So the lowest that it was saying, I'm sorry, the lowest, the 0.618 is for this cycle over here. So on this side, it was saying that we should have came down to around $103. And as you see, we only came as far as 164. Now that's fine, you know, because at the end of the day, you should be accumulating as the markets decline, just so that you don't get caught up just in case the markets, you know, keep going up or don't hit your, you know, downside target. So right here, you know, we had close to we had a 0.618 target, and it was close to the bottom of this market. But if you also look over here, back in 2013, when Bitcoin went on its run from 2011 around $2 and kept going up, and we hit a high of around $250, we came down, hit this Fibonacci around 50. We're trading up and down, you know, a little volatile inside of this range, but it was also around the 0.618 Fibonacci range. So that was also another target where you should have loaded up at. And as you see, that was also a bottom. And prices went up from there, all the way up to 1,173 target, $1,173. So now, what we do from here is do the same exact thing. Fibonacci. Pull out the Fibonacci retracement tool and just go from the top, which was on this cycle back in 2017, $20,000. So we go from the top all the way to the bottom. So now the bottom of this market was saying what? 0.618 Fibonacci, $3,188. And as everybody know and remember, the 2018 bottom was 3,100. Was 3,142 to be exact. So this range right here marked our bottom. It showed us pretty much where the bottom was going to go, where we should have accumulated at. And as you see, once we got out of the $3,000 range, we went up about 300 to 400% all the way up to about $14,000 before coming right back down to the same exact range. But as you see, we supported above that range. And then we supported above that range, creating a higher low. And then we kept going up from there and made another high. So what do you think we're about to do from here? Yeah, Fibonacci, exactly. So do the same exact thing, right? This time, go to this high of $69,000, which is over here, November 2021, and go to the bottom of the market, right? So now we can delete this, and we should look at the 0.618 Fibonacci. And the 0.618 Fibonacci says $21,174. And we are currently at, remember, $23,155. So let's bring out our rectangle, and let's just mark this range and see what we got from here, where we are. So we came down as low as $17,622, and we are currently once again at 23,000, and the high price that we went up to was 24,600, give or take. We are currently inside of this range right now. We should expect to stay inside this range until we get above it, or we decline below it. So right now, since we're hitting the top of this range, we should expect a decline, to the bottom of the range at the very least. But if not, and we are showing some bullishness inside the markets, especially with the inflation coming out that it's not as bad as everybody thought, we could actually get above this top yellow line and keep going up from here. And especially with us having confluence that the 0.618 range was right there, which signified every single bottom in every market cycle, during every market cycle. So why would anything change for the most part? And even if we had, this area right here where it was a little bit, close to, the 0.618, we still were in a range right here where, just say if, we extended this part out, we would still be inside of that range over here. So it would technically be, a good buy still. And so right after this, I want to actually predict the future from here, right? So since we found out our bottoms, I'm going to use a Fibonacci retracement tool again, and we're going to go back to the 2017 cycle high of $20,000, right? So the high over there was $20,000. We're going to pull the Fibonacci retracement tool from top to the bottom of the $3,000 bottom in 2018 this time. And this is how we're going to figure out our upside target. So the bottom was $3,000 over here, and on the upside, the 0.618 target was over here at $9,847. So on the upside, we can mark this range and this right here was the target price from these lows. And as you see, we went up to those, we got a little bonus above, came back, started to roll over. As soon as we got below the 0.618 Fibonacci again, that should have been your indicator that the market isn't that strong and that we'll eventually roll over. But as you see, once again, we stayed inside this range, and then we started to head back up. So now the next thing to do is to just check out the 1.618 Fibonacci. Even when we're down here sitting at $3,000, you mark the top to the bottom, you found your 0.618 range, and you also are supposed to look at the 1.618. So what I'm going to do is just put a horizontal line over here. Bam. And then just go right. And look what we have. The highs of the next market cycle. So technically it was saying that $61,425 was the high of the market cycle. But of course we got little bonuses above, and we went all the way up to $69,000. And then we came right back down into the range, and this is where we're currently at. So we just marked out the bottoms and the high of the market, and we could even play with it back here in these market cycles. So let's say, for example, we do the same exact thing. We go to the high of the market, and then we pull all the way down to the low of the market around $2. And we're going to delete this one so that we don't get confused. The 1.618 was $176. Remember, the bottom was $2. And what do? We went to the 1.618 Fibonacci. Pretty cool. So now we could even play with it over here. Top to the bottom of the range. And this one right here was saying $735, but then, as you know, we went up to 1100, came down to the range. Let's delete this, just so that everybody can see this better. Do another Fibonacci from top of $1,100 all the way down to the bottom of $162. $4,000 was the target, but then we kept going all the way up to $20,000 and actually came close to the 2.618 Fibonacci. $29,000, but we went to 20,000. So we only had pretty much one Fibonacci retracement that was a little off, but even still, it came, mere percentage points from the actual target. And we have this $61,000 target. Once again, 1.618 Fibonacci range. We went up, and what everybody's probably been waiting for, since we technically put our bottom in the market's around $17,000. The 0.618 Fibonacci is around 21,000. We can pull a Fibonacci retracement tool from the top all the way to the bottom of 17,000. Look at our 0.618 range, which is over here. If we do not get above the 0.5 Fibonacci, then we'll pretty much just roll back over close to this range or close to the bottom of this range. So the 0.618 says $40,958, and currently we're at 23,000. So that would be honestly 100% gain from here if you're inside the trade right now. So if you put your fear aside you, and just think about the long term, just think about, that, get into the markets, you have a potential gain of 100%. So what you do now is look at the 1.618, and we have a target of $159,000. $159,000 on the next high. 1.618, 1.618, previous 1.618s on the other charts. So just let me know what y'all think. Leave a comment. Make sure you like this video, please. Share it with everybody, please. Because I feel as though, we have bottom inside the market. Everybody's making things, a little bit more complicated than it has to be, saying that we're entering a recession right now when we've honestly been in a recession since they've been, talking about, the virus that was out. A lot of people around me, I've been telling them for a while that, the government is going to do something, to pull off the next great recession. And pretty much, we are here right now. And I just wanted to keep everybody sane. Don't want anybody to, stress out about what's to come inside the markets and all that. Regardless of what happens inside the markets, just remember to keep accumulating, and everything works itself out. And stick to the long term, because As you see, since 2011, 2010, 2009 actually, Bitcoin is up crazy. Bitcoin is honestly up. We're going to do some just for fun. Bitcoin is up from the bottom. Current prices. I can't even see the number on my chart. What does that say? 7272277. 72,722,770%. Like that's uncalled for. But yeah, this is Rel back again with another video. This is a Bitcoin video. Just wanted to show, if we had bottomed in the market, where we should be headed and all that. And once again, I do feel as though we had bottomed out. I guess one cool thing I could do from current prices to the 0.618, that's a 75% increase, and all the way up to the 1.618, that will be a 580% increase. So just think about those potentials that you have at stake right now. All right, y'all, signing out.